Hey everyone, Joseph Corbone here with your 2026 market update. June was a fascinating month, and I think the big picture story is actually a really good one. What happened? Two major things defined June. First, the good news. Oil prices were sharply lower throughout the month. Second, the challenge, technology stocks hit a rough patch in June. Investors started questioning whether the massive spending on AI is going to pay off as quickly as expected, and news about a potential delay of the OpenAI IPO and price increase from Apple and Microsoft added to the pressure. What the markets did. The result was a mixed month. The S&P 500 slipped slightly down just over 1%. The Nasdaq declined about 2.8%, weighed down by technology, but the Dow was actually up 2.5% for the month as industrials and financial stocks picked up the slack. Year to date through June 30th, the S&P 500 is up 9.55%, the Dow is up 8.85%, and the Nasdaq is up just under 13%. International markets also held up well, gaining 0.68% in June and now up 9.88% for the year. That puts international markets essentially even with the S&P 500 on a year-to-date basis, which continues to reinforce the value of staying globally diversified. Oil, gas, and bonds. Oil prices had one of their best months of the year for consumers. Brent crude fell nearly 20% during June, its steepest quarterly decline since 2020. Closing the month around $74 a barrel. That's a massive drop from the highs above $100 we saw back in March. Gas prices are coming down, supposedly, although it still costs me over $120 to fill up my gas tank in my Ford, but I guess that's my problem for buying a pickup truck. On the bond and Fed side, Kevin Warsh chaired his first Fed meeting in June. Rates were held steady at 3.5% to 3.75%, but the message underneath was hawkish. The median Fed official now projects rates to end 2026 higher than they are today, a complete reversal from just 3 months ago when cuts were expected. No rate hike happened in June, but the possibility of one before year end is real. We'll be watching that closely. Sector winners and losers, industrials, healthcare, and materials were the standout performers in June as investors rotated away from big tech into companies with more straightforward near-term earnings. Technology and consumer discretionary lagged. The Dow's strong month tells that story perfectly since it leans more towards industrials and financials than the Nasdaq does. Let me give you the big picture as we head into the second half of the year. Oil is back below $75 a barrel. The S&P 500 has returned more than 14%, including dividends, in the first half of 2026. One of the best first halves in years. Corporate earnings grew nearly 29% in the first quarter, and every index we track is solidly positive for the year. That's a fantastic foundation heading into the second half. Your diversified portfolio is right where it should be. As always, if you have any questions about your account or just want to talk through what any of this means for your plan, don't hesitate to reach out. We'll talk soon and go eat some pizza.